Hello, ladies and gentlemen, and welcome back to another video. First things first, before we dive into today's topics, this is not financial advice. Anything I say in this video is strictly opinion content, and I am not a licensed financial advisor. So it goes without saying, but I'll say it anyway. Investing in anything is extreme high risk, and this is just strictly my opinion. With that understood and out of the way, we've got a big time GameStop stock update video for you guys today. First things first, I wanted to say thanks to everybody that's thumbs up in the video, commenting, subscribing. We've had some really good discussion in the comments, and I hope to continue that. Whether you're bullish, bearish, just want to talk about GameStop or Ryan Cohen or whatever, tinfoil, love it. So thanks, guys, for that. Couple really big updates today, and the broader topic of today's video is I don't understand the sentiment around this company and around the stock right now. Now, we did get the fails to deliver from the SEC. The SEC, magically, the government shutdown is over. No one's back to work, but the fails to deliver have now popped up. So we have these, starting with XRT, the number one, I was going to say crime engine, but let's keep it above board here and just call it what it is. It's an ETF that contains GameStop that coincidentally has a record number of fails to deliver on October 13th. 1.468 million shares of XRT were failed on that date. So let's pull up our chart here. I'm going straight to GameStop, and you can see here a little bit of a doji for GameStop as it was just in a suppression cycle, and then another big downturn there, kind of heading into where we are now. Obviously, we know that that is probably, and I don't want to talk in definitives here. I think that's dangerous, quite frankly, but we'll call it what it is. We think it's probably a swap. So you can see XRT big push down here as well. And then, it was going to catch some pretty big upside there, and they ended up failing the stock. So something looks a little bit off with that. Now, that's the highest level of fails for shares on XRT as far back as the data goes. It's more than this. That's 1.42. So that's big time news. Now, that's more than when Roaring Kitty was active, by the way. That's even more than that period of time. So take that for what it is. 1.47 million is the highest. That's right now. So that's major. Now on GameStop itself, they are spilling over there. Consistent fails here. We had a million shares basically on October 9. We'll go to our handy dandy chart and look at October 9 on GameStop. Yep, straight down that day. It's interesting about this too. So we have the swap here, probably a short position to hedge that. Looks like GameStop tried to have relief, and then the next day they're like, blow it up, just fail it, can't do it. And that's, you got the downward action here. So it's really disheartening, I think, as an investor, as a GameStop enthusiast, as someone that believes in the future of this business and the financial health and can read the balance sheet. It's very discouraging to see this. But for me, when you get this data that we've been missing, and of course, the closing date for this is in a matter of days now, coincidentally from the SEC here. But when you get this data and you see it and you go, okay, yeah, something behind the scenes is going on. XRT more fails in a single day than when Roaring Kitty was active. Something big is going on, and it renews that spark. If you've ever wavered, or if I'm ever wavering on, I'm never, by the way, but if I am, that renews my interest and my spark. Now, a couple other things fails to deliver wise. GMEU, the borrow fee, by the way, is the highest it's ever been, 32%. So go back to the bond offering, whatever, it's higher than it was then. So, you're seeing that just absolutely, it was 30% here. Now it's 32%. So this swap is probably in excess of 250 million. And how am I making that guess? And again, it's just a guess, but in the bond offering, that's the premium being paid for the bonds. You have to think that they're going above and beyond that now. I would say probably a comfortable guess would be that this swap is in excess of $250 million. That is a lot of money on what a lot of people say is a piece of crap retailer. Well, why? Answer this question for me in the comments. Why would they be spending so much money trying to suppress a piece of crap retailer if they really believed that? That's the question of the day. Now, another interesting segment here, silver. Silver has long been speculated, and I'll pull up a Reddit post here, that GME is swapped with silver, and JP Morgan is essentially the swap dealer that's holding the GME synthetic shorts, and JP Morgan also holds Bear Stearns' silver position, which far exceeds authorized position limits. Now, I'm not going to get into the intricacies of this, but I suggest you read some of this possible due diligence. It really goes into the likelihood of this equity being connected to the precious metal in silver. There's definitely a possibility that there's something there. I would never say definitive. It would have to come from someone that has knowledge of how swaps work and baskets involving precious metals like silver. But you can see someone is very much struggling with silver's recent appreciation in price. Look at these fails to deliver from October 13th to October 2. Coincidentally, and let's just go right back into GameStop here. Oh, October 2 was the peak on GME. And then it goes straight down. Well, October 2, what do you know? $250 million failed. The next day, $354 million, $482 million, $366 million, $287 million, $228 million, and another $174. You don't need to pull out the calculator to know that this is over $2.2 billion worth of fails in this short amount of time. So someone is clearly struggling with their silver position. Now, let me pull up SLV. This is the ETF for silver. It's basically been parabolic here, 42% over the last couple months, and someone is obviously struggling to control it. Now, if you're running with the theory that these two are linked, GameStop and silver, then you could maybe estimate that this swap that someone is renewing, rolling, etc., struggling with, whatever you want to call it, you pick the verbiage here, could be in excess of $1 billion. And I'm just, again, 2.2 billion maybe, but I'm just throwing this out there. If that is a link, that's your tinfoil for the day. Chew on that lightly, if you will. But point being, fails to deliver, very, very suspect. Now on GMEU, again, you're just going to see this is the reg show period here. They fail in excess of the threshold. Boom, back on reg show. We have 1.2 million notional fails on October 13th. They are using all these tools. They are maxing out these tools. You can literally see the reg show periods here on the graph. This since inception, and I want to be careful with what I say here, but this thing has clearly been used for nefarious purposes. I don't think it takes someone with financial acumen to see that. So fails to deliver. Let's put a bow on that conversation. Looking pretty spicy for GameStop. Now, another big topic I wanted to hit today is institutional ownership. And the numbers that I'm seeing from the big wirehouses, the big players in the industry are very good so far for their Q3 filings. Now, again, this is preliminary numbers. Let's wait. We're not going to move the goalposts here, if filings come in a little light this quarter. But you've got to like what you're seeing here. Now, Scana Management LP, big put position, big PRN position. This is bonds. So they have declared the bonds. They bought 1 million more bonds in their last quarter. So that's encouraging to see. Why do I say that? Because you want to see these bondholders keep these and add to them as GameStop depreciates in price. When institutions swoop in, and this is the bond graph, another just a disaster chart here. Thank you, swaps. But you want to see institutions commit to their long, whether it's bonds, shares, warrants, etc. This is what you want to see. And real quick, just to go back to the fails to deliver here, I do just want to show the warrants. And before, I can already hear you guys typing in the comments, this is outrageous, but even the warrants are failed to deliver. So you had 1 million fails, 1 million warrants failed on October 9th. And again, that's just, it's hard to comprehend it, but it is what it is. You saw it right here. GameStop warrants, they were looking like they were going to squeeze up 30% at one point and just straight slam down. So, they're throwing the whole book at it. Even the warrants are being failed to deliver. It is what it is. Going back to institutional ownership, people are going long on the bonds. You're having, Fidelity, which is Geo Capital Management here, 200,000 shares. That's a 3% increase on their total position, 200 million plus position size, market value estimated. And that's with GameStop at lows. So that's a large position. Simplex Trading, a lot of calls flipped long, 121 million. Now, I believe that is an options dealer. So, it's not like they're, YOLOing into calls, but very good to see the net inflow to the call volume versus the puts. Group one trading, tons of calls, 1.2 million or 1 million shares worth of calls, $86 million in market value. Now, some of these values you have to take with a grain of salt because of the calls and puts. Actually, Michael Burry talked about this in a criticism of the financial mainstream media, that essentially they are inflating the total positions here based on prospective market value. So let's just take that logic and say we're going to temper our expectations, but certainly this is not bearish. BlackRock, however you feel about them, they have close to $1 billion invested in this piece of crap retailer. You had another Barclays aggressive long here with calls and a nice add in shares. They increased their call position almost 500%. Okay, that's a big bank, Barclays. So that is what you want to see. Now, you'll see a lot of green on here. That's good. We want to see this continue, without getting into the nitty gritty of who's buying, who's selling, who's flipping shares around. It's a net positive at minimum. And the fact of the matter is, when you're seeing GameStop go down like this, if it's a swap season, if this is multiple swaps, 2 swaps, 3 swaps, who cares how many swaps? The price depreciation like this rapidly, guess what that does? Forget the swap and the swap counterparties here, right? This is an opportunity for institutions to look at GameStop and go, wow, we can buy this at $21. They might be buying big time in this area. And of course, you're going to say, well, price isn't going up. No, of course it's not. Most of these trades are going straight to the dark pool. Let's not even get into that. Let's not go down that road. Let's not have that rant today. Okay, we can have that another day, any day of the week, really, if you look at the exchange volume. But they could be saying this is very attractive for a long. And if you're taking the logic that Ryan Cohen is issuing warrants that would be exercisable at $32 a share, well, let's just say in a year from now, or, maybe he extends the warrants, which he can do for another year, but a year or two from now, GameStop is trading at around 32 pretty consistently. That's 50% up. So if you're BlackRock, if you're Fidelity, if you're Barclays, if you're a big wirehouse, if you're Charles Schwab, who, by the way, dumped some shares, let's, not pretend it's all rosy. If you're them, would this not look attractive? It probably does. If you can read financials, if you say 5 profitable quarters in a row at $21, trading near the cash floor, I mean, that's an opinion, but, that's pretty good. So you could see some big institutional buying here on the next quarterly reports for institutions on the next 13F filing. So we'd have to wait a little bit for that, of course, but that would be something that very, very much excites me because, again, you have to think that, like, are institutions really going crazy long on GameStop here in this high 20s range? They accumulated nicely over the summer. They accumulated in this range here. And now we really want to see them load the boat here and have institutional ownership go to all-time highs. And again, yes, they could be using it for the lend pool, this, that, and the other. But for the point of this video, that is one of the things you want to see. And it kind of brings me into the overarching topic of the sentiment I'm seeing in the community is near rock bottom. And I think that, because price is truthfully too near rock bottom over the past couple of years, it freaks people out. But I think part of me, and let me know in the comments what you think about this, part of me feels like it's almost a coordinated effort to demoralize the retail investor, to demoralize the GameStop enthusiasts. And for me, speaking personally, this is something that I have learned almost flipped upside down my perspective over the years with this stock in particular, but across the market. When you have a gigantic discount like this, for whatever reason, market mechanics, swaps, whatever, don't even go down that road. If you just see that this stock is down, close to 30% in a very short amount of time, wouldn't you step in and look at the financials and say, wow, this is, to use a cliche, deep value? And to be more excited about GameStop down here in the cellar than I get when it's up here. Now, I do think some of the excitement, at times is warranted up here because really, if the Dorito of Doom breaks, shout out to BA Trader for coining that TA years ago. But if that breaks, there could be some serious upside. Sure, that's all well and good. But more often than not, GameStop trades in this range. So why would I not be more excited down here than I am when the stock is up here? Let me know if you guys agree with that. I certainly completely understand too the side that, hey, no one likes seeing red candle after red candle after red candle. And look at this too. Turn your attentions to this. If I pull up the weekly chart here and we just look at, ignore all this terrible drawings here I have in the background. 1, 2, 3, 4, 5, 6, 7. That's almost 8 trading weeks of garbage price action on GameStop. Now, that's, over the summer was pretty boring too. But this is, to have it so soon back to back from that is just demoralizing. So I understand that. And really, that's some of the worst range since Roaring Kitty returned. And you can see kind of how quickly lived the upside is. But then you say, okay, I'm going to look at the balance sheet. I see a profitable company. I see revenue improving with store count closing. So to me, what does that say? Well, they're signaling other ways to get revenue. Speaking of which, PowerPacks just launched their baseball card segment. And in honor of that, I wanted to rip a baseball pack with you guys on today's video. If you're not into collectibles, and I'm not really, I'll be honest, like I don't know much about Pokemon cards. I know some sports knowledge and stuff. Like I know what would constitute as a good card. But we'll go ahead and rip a pack here just for, show off this new feature. So basketball coming soon. Baseball just launched. Let's go ahead and do a silver pack and hope to get maybe a Yamamoto or something here. Now, the process of all of this is super seamless. It's well integrated. So without further ado, let's get our silver pack here and see what we get. Okay, I don't know what that is. A Reese Hoskins, I think that is $44. So $6 off the total value. Not bad. Let me know, guys. Are you doing power packs? Are you getting into it? I'm going to sell that, except the buyback there. Are you liking power packs? I think we have enough to do another 50 piece for you guys just from our balance. So we will do that. And again, instead of buying call options and this and that, would I rather buy shares? Probably, but just to support the business, which I think is a crucial part of this thesis as well. I think this is a nice thing to do. It's fun. It's a way to collect. It's a way to build your collection. Okay. So we got 2 bad pools there, but, and we will sell this back. We don't need that. So I'll accept that buyback. But that just goes to show you guys, GameStop has a new model there. Baseball card inventory, really good for the company. Want to see that help the bottom line of the business revenue go up from that exact outfit. So that's my thoughts for today's video. To wrap up, I just don't understand why there's not more continued enthusiasm at this range, why people aren't beating the drum for it, but maybe it is, maybe people are beaten down, or maybe the tinfoil is true and this is a coordinated effort to demoralize the retail investor prior to something pretty magnificent taking place. So hope that helps, guys. Hope everyone is having a good week, and I'll talk to you again real soon.